Well, welcome to Real Fridays, and Real Fridays is a live broadcast between myself and a couple of my cohorts who are currently late, Brock Cassidy and Jeremy Potter. And oh, here is Jeremy now. So I just added Jeremy to this. This is perfect. I've already
Hey,
started.
listen, wasn't my fault this time. Wasn't my fault this time. That's all I have to say.
Possible.
I was here.
So I think I'm just gonna sort of blow this up because we know Brock is gonna be another 3 or 4 minutes late. Um,
Great.
but no, as I was just leading up, it's the Real Fridays sort of podcast. So our focus and sort of podcast is probably the right way of saying it.
Yeah.
But the focus is just real talk on headlines, housing, real estate, mortgage, what's happening in leadership and innovation, especially on the technologies front, and then what's just going on within the landscape that many of us walk in every single day within the mortgage. Thank you, Brock, for being on time as always. So
Invites
we
every week. This time it was my personal email and a subject line that wasn't clickable, so it took a minute.
Jeez. Somehow every single week it's my fault. I feel like I'm back at work. So the price for leadership.
That's right.
So no, look, guys. I sent out an agenda, and I know that we've been talking sort of on and off all week, and we all have fairly busy weeks ourselves. Where do you guys want to start, given the agenda that I sent out?
I think one of the things that struck me about this week and about what you were, I think, angling to talk about is the rate of change or the expectation of change. And I think my expectation of change over the last 6 months has, it's like bad word choice, but has changed.
Yeah.
I have lowered my expectations. I've reframed my expectations of both what's going to happen and what's possible. And at first, it probably came across as a little pessimistic, at least when the three of us were talking. But for like the larger conversation in the industry, it actually makes a lot of sense to me. Like, we're driven by incentives. Everybody's driven by incentives. And you got to figure out the right ones. How do you incentivize the behavior you want? How do you structure incentives right? Whether it's a regulator setting up a structure for how you're going to originate or disclose loans, or whether it's a CEO figuring out compensation structure that makes sense for MLOs, sales, business development. It's like, what are going to be the right balance? And you got to move around within the levers you can pull. And I just, when I look at across, especially independent mortgage banks, but also just the industry, like, what's the incentive? What's the incentive to innovate? What's the incentive? What's the incentive to make a fully digital process? What's the incentive? Like, I just don't see it.
Yeah.
I'm not seeing it right now. I cannot see the incentive. Like, I have the curiosity and intellectual engine to say, like, I want to see this possible because I want to see consumers react to it. And I want to see what happens when consumers see the way it should be. But if it's not going to fundamentally change the economics of the deal, then it's not going to happen.
Yeah. No, we've talked about this for years, and the challenge is during dry times, no one has the capital or the appetite for sort of rocking the boat with new changes. And then when pipelines are full, no one has the bandwidth or the time because they're just so focused on closing what's right in front of them. And this is pervasive, man. I mean, I see this across companies of all sizes. It's truly kind of, to use sort of a Clayton Christensen term, like an innovator's dilemma around how exactly, when do you budget in or prioritize real innovation? And there's a couple lenders that do it. I think Loan Depot does a good job in as much as they've been just, heavily criticized in the media. I think the fact that they're still going reasonably as strongly as they have, and they've held their ground. They're constantly trying to innovate, and I really respect what they're doing. Cross Country is the same way. I mean, Cross Country's innovation lab and technology group is in Charlotte, North Carolina. It's one of the best technology leadership groups. I think we lost Jeremy, but
Yeah.
Keep going.
Oh, got it. One of the best like innovation labs, focusing on all kinds of ways. OCR, AI, like different innovations to try to streamline the process. What's the other? There's not New American Funding is another one that I've seen that does I think a really good job. But it's hard. I don't know how.
So let me ask you this, Rick, because I'm in the Real Fridays. I'm in the Real Fridays flow here, but like what you just mentioned, I do think benefits the team members of those organizations. I think the team members of those organizations have a better experience day to day than they did, say, 3 years ago, or 5 years ago, or 10 years ago. Can you mention or point me to like what has changed other than that? What have those things done? I mean, we can't see behind the curtain that maybe the margin. We can't see behind the curtain that maybe the margin or the economics have like fundamentally changed. But like, has anything else changed because of those things?
Well, it depends if your gauge is on it. I'll be curious on Brock's perspective on this because he's on the consumer side of it, or on the realtor consumer side of it. But I don't see much change for the consumer. In the way the consumer actually, qualifies for a mortgage, secures it, and actually gets through the process of closing a mortgage. I think there's, ancillary improvements that have had real like outsourcing and different things of reducing costs and increasing corporate margins, or at least try to, salvage your corporate margin is probably, the better way of saying it.
Like resiliency now. Whoever the I is, I have resiliency now because of those things 2 years ago or whatever. More so than my competitors.
But no innovative changes that have changed the landscape.
No, I think it's like going for the less bad, right? Like not so much improvement necessarily. No, I mean, I think, Lending Tree had their summit. We talked about this last week. They had it about 2 weeks ago, and we were out there presenting to an audience full of the biggest lead buyers, more or less, in terms of lenders: Rocket, New American Funding, bunch of consumer direct shops, all those, a lot of the ones Rick just mentioned. And I don't know, they had the innovation forum, and it was really, I thought it was really well done. There were some larger tech companies that pitched. There were a bunch of startups like us that pitched, and everyone seemed super engaged. I think, but I think it's like, well, I think about it this way, Jeremy. The jobs like, to some extent, jobs like you and I had at Rocket a few years ago there's not as many like innovation jobs that exist, right? When times are lean, there, I'm sure we could have found a home somewhere, but like a lot of jobs that are fully, strategy or fully innovation or fully, not producing revenue that day, I feel like get cut in times like this. And so, I mean, we are finding with NewZip that there's a lot of lenders that want to innovate, and if a partner can do a lot of it for them, they're willing to. And so we make it really easy to use, but we're also running into a lot of people that want to do it and don't really have like the operational bandwidth to do it, because their operational bandwidth has been getting cut. And so, they kind of want to do it. Maybe they even sign up, but maybe they're not really implementing the innovation they're signing up for,
Yeah, it's interesting because I've had the opposite experience to some degree at TitleLook recently, to your point, Brock, which is one of two responses. I need my fewer people to be able to do more. So what tools can I give them to have one person do this kind of like more effective, more efficient work? And that's been good. So that's good, I think, for innovation. I think it's good for vendors to say, hey, we can have your person who is left leading this significant business area with fewer people, or the team has been reduced, but here's how they become more effective or more efficient. But then I've also heard this, and you probably do too at NewZip, which is nobody's asking for this, or I haven't heard that this is broken. And I thought that was an interesting response, because it's like, well, no kidding. We're operating in this area, especially Brock, what you're talking about, what we're talking about, we're operating in this area where it's like, no, we're trying to give it to you before you realize it's broke, before you have it break, before you need it, right? We're trying to get ahead of that problem And I was kind of struck by that, Rick. To your point about tech spend, I mean, one of the things you wanted to talk about was a little bit around tech spend and R&D in these moments of constrained resources. And like, it's kind of hard if the theory is it's not squeaking. Well, yeah. So I'm only supposed to work on the squeaky stuff? Like, give me some sense here of how we succeed in these moments, or how we do in it. I can't even use the word innovate anymore. How we do move forward.
Give me an example of an innovation, and it could be within mortgage or not. And I'm fumbling with my words a little bit in describing it. So I think an example can help summarize the description, where an innovation happens and then no one really calls for it. No one really demands for it, but it happens. And then people scratch their head wondering how they got by before it even happened. You know what I mean? It's kind of like, now that I've benefited from it, I'm like, oh my God, I can't believe we did this before. Now that we have this innovation or the step forward, you know what I mean? Like, can you think of any, whether it's within mortgage or outside of it?
So let's stay within financial services for a second. I mean, I think there are things I didn't predate the FICO score. I didn't predate like a credit report. I didn't predate work number in this industry, but you got to assume something like, I can call one place and get verification of employment, right? And there's startups. I want to be clear, everybody hates the work number, at least that's what I hear. And there are startups trying to displace them, but they're a monstrosity for a reason. Call one place, get the verification you need. Credit report, press one button, get the full credit history. $15, $40, $60, whatever it's up to nowadays. $100. Yeah. However, I mean, they're squeezing it, is my understanding, and they're going to continue to squeeze it. But there's a reason why, because it became the easy pass, so to speak, to get credit history, press one button, and you're done. So they are they're being allowed to tick the heat up for now because of that. So like that kind of thing, I think we got to go back pretty far, Rick, but that was at least press button, get some piece of underwriting that used to be manual.
Yeah. It's interesting. I mean, I kind of came into the business right around that time when, because there was a loan origination platform called Contour back in the 90s that actually created the ePass network. That when Ellie Mae acquired Contour and its assets, they took that and then actually built up their interconnected networks of services between appraisal, title, credit, and they would plug into these vendor services. So I was entering in the market right around that time frame when that sort of started to come out, but it was always kind of a pain. So it was sort of an expected efficiency. It wasn't like, where'd this efficiency come from? It came out of nowhere, and oh my God, thank God it's here. I don't know. I'd have to think about that a little bit, about what that could be in our space, because our space moves in such slow, freaking painful steps. Because our models are built around the here and now, and not just the here and now, like the Friday to Monday here and now, not even, like I sent out an email to some originators today saying, look, this is a 2-week month, like tunnel in, focus on this 2-week productive month, because going into the 18th of December, that's the week before Christmas. Everyone's going to be shopping. It's going to be really hard to get anyone's attention. So you're focusing on hammering your realtors and your consumers on collecting everything that's needed to try to close as much volume you can, because the latter end of this month, it's going to be a challenge to capture everyone's attention.
Rick,
and it's all about here now. Did I talk about innovation at all? Did I talk about doing things efficiently? No, it was hustle through it so you can close your loans, get paid, and then we'll do it again next month.
You guys should do the big red bow at cross country. Why don't you do the Lexus December to remember? Nobody buys houses for Christmas. I bet somebody out there does. If you're gonna buy your
Happy Honda Days.
Well, we'll do
Happy Honda Days. You could get a big red bow and the cross country mortgage red bow on top of the house, Rick. There you go.
We'll go as far as doing a red bow around an appraisal and do an appraisal there. A free appraisal for $100.
I think my understanding is Michael's, the craft store, sells out of red bows early in December because people like using the big red bow now. It's like become like a thing. We haven't brought it into real estate yet. But I think you're making the key point, which is there's already kind of a transactional aspect, and then you've got, whether it's incentives like quotas or whether it's compensation or what have you, but like it's either month to month or quarter to quarter. And so, building something that fundamentally challenges market share a year from now or 2 years from now or 5 years from now, there's no incentive to do it when the product is the exact same, when the pricing on the product hasn't changed, and the pricing and distribution of the product, meaning it's a government-backed commodity, hasn't changed. So that's why I joked in the chat for those on YouTube. I was joking, like, there's some grizzled vets who are like, the kid's finally coming around, he's learning his lesson type of thing. I don't know if that's true, but I'm joking about it because that's one of the reasons, like, hey, you want me to do all this cool stuff, but what's the return on the investment? And if you can't, which most people in the innovator's dilemma can't guarantee me that it's going to change anything, like, I'm not making that investment.
What do you guys think to be the most substantial, not just cutting around the edges or improving the periphery? What do you think the most substantial leap forwards are going to be? I can come up with two quick suggestions.
That's my favorite question.
I just don't necessarily know how we get there because of the short-term myopic focus of most of leadership and the capital required to actually invest in these technologies that might be 2 to 4 years out versus things that can really help us today.
Yeah. If you don't mind, I'll ask sort of the one that's way out there and then the one that's more immediate and realistic. I mean, I think the biggest challenge for the next year around this question is who gets proactive and moves up funnel and who doesn't. And what I mean by that is the ability to use data or access to a consumer way up funnel means you can do a lot more things proactive. I think proactive finance and I think proactive use of data in the collateral space, meaning on the listing or on the house, are the two biggest disruptors. So an example of proactive finance would be essentially having some relationship with the consumer's banking information, whether you've asked them to join a program or whether you have it already from a previous customer relationship, and you start proactively sending them advice on their homeownership journey. Proactive finance is going to change people's minds about how and when they're ready to go shopping. Once they're shopping, as Brock's going to tell you, they get into that lead funnel, they get into that lead churn, and then all of a sudden it's mayhem. I will call it mayhem. It's expensive mayhem. And so the folks who get ahead of that and say, if I'm a bank, let's say, and I want to invest in mortgage, going to my renter depository clients and saying, you're already approved for a loan with us, right? Or having a program that says, would you like an ongoing assessment of your home buying power? And being able to proactively deliver home buying power assessments way ahead of the funnel. Right now, Plaid and a bunch of other fintech tools are making that visibility possible. That's one. More immediately, though, that I think mortgage companies can be thinking about and doing without spending a ton of money or changing all that much is like, you're sitting on a ton of data you're not using. Your servicing portfolio, your existing client data. I just think we're bad at kind of drawing that data up and out of the organization and then using it to go either sell ancillary related things around the home that home buyers, homeowners, I should say, need, and or identifying who is in the markets, in the life events, and being able to kind of try to bring them back around before they go out to another funnel, before they go out to another site. I mean, we are bad at that in this industry on the banking or mortgage company side.
Yeah. Brock, what do you think, man? We have about 10 more minutes left too, because I have a hard stop at 1 o'clock. But go ahead, Brock.
No, I agree with everything Jeremy's saying. I'm betting a substantial, hopefully, chunk of my career on what we're building at NewsZip for a reason. Like our big take is that every client needs to have basically a customized and integrated experience between real estate, whatever you want to call it, right? Between their life, right? Between their living arrangement now, their living arrangement in the future, their finances, all this stuff. And I think a lot of it's going to be done by AI. I don't think it all needs to be human. I think some of it needs to be human, but maybe most of it can be AI, and more every day. But I think everyone just needs to have a customized, integrated experience where, like Jeremy's saying, that stuff's all at your fingertips. I mean, you can get, just think about like Amazon tells you what you need to buy now, right? Like, it's like, why aren't we doing that here? Where, if someone wants to, restructure, if someone wants to modify a loan, I think that should be a lot simpler than it is today. If someone wants to take out a HELOC, that's getting really easy, but it's not integrated with the current servicer probably. All these things where, I just don't think the living arrangement is like housing. Someone's housing situation is in very good context with their financial situation today. And those two things, and it shouldn't be that hard to integrate those things. There's plenty of tech out there today to do it. So I think it's just kind of investing in and figuring out who's going to do it. Our take at NewsZip is that we're, whether you use our true platform itself, like you log into our platform and see every single thing that's going on between finance, real estate, and kind of like moving concierges and everything else, fine. But we think most people probably aren't going to log into that. So we have bidirectional APIs pointing every which way to connect with every system that a consumer is touching. Could be their servicer, originator CRM, originator marketing system, could be, banking information, could be a million things. So I just think that there needs to be more integration and context. So, I mean, basically the same answer as Jeremy, but I don't think it needs to be far out. I think the tech is easily there today, and we see it in we see it in e-commerce and all kinds of other places where it tells you exactly what you should do and one click to do it. And I think we train AI models on 120 million homes in America and 400 million Americans, or whatever the number is today. Like, every one of them can have a customized experience about what's going on with their finances and housing. And I don't think the tech's like pretty easily already there. Yeah.
I would say, and I agree with you on the integration sides of things. I think, the tech is there. The question is, what are the disablers or the hurdles that are preventing the implementation or to operationalize these integrations in a meaningful way, right? And innovation means a lot of different things. Like, there's innovations for the consumers, there's capital market innovations. I think, and then there's just overhead cost-saving innovations on the front end and like operationally. So there's kind of an AI on the front end. I think AI is going to have the most profound effect probably for the consumer on the front end. And this is sort of the major reliability issue. We had talked about, Candor. We just went off of Candor because of some of the challenges we had from a buyback risk standpoint because of lack of consistency in the findings and what we were relying upon the tool to provide us. And again, it's not a knock on Candor. They're innovators, and you don't always get it. Sometimes getting it right is a refining process, and over time you get it more right. So it's kind of right-ish, right? But I think AI on the front end is going to be the most profound, and then I think blockchain and capital markets is going to be profound. The question is just implementation. I'm shocked that Mike is really on a field on his own. He's in sort of a total category into his own. There's a lot of talk on large lenders sort of pursuing blockchain, but there's no real meaningful steps in that direction that I have seen, to be honest. But I do see that as probably the most sizable innovations. And then the last thing I'd say, Jeremy, you had mentioned about the partnerships piece. My whole focus within cross country, and I think within the lending landscape as a whole, is trying to integrate that experience. So it's not just the loan that you're financing, it's how do you make the home ownership experience more comfortable and more efficient and smarter for the consumer. So when it's February and your furnace goes out, there's really sort of something monitoring the home in a way where, like, the system and the tech is on its way before you even know there's a problem with the furnace. So when the furnace, in its reporting comes, it alerts a local certified technician that's coming over and calls you and says, hey, I'd like to schedule an appointment. We're detecting something wrong with your furnace. It's not burning efficiently or whatever. Oh, I didn't even know there was something wrong with it. Well, that's a better innovation than having it be 20 below zero outside and your furnace goes out and you're like, oh shoot, I got to get a repairman over and it's going to take a week to do. And my house is now without power or without heat. So making the home smarter and organic is going to be our partnerships I'm trying to sort of interconnect. But that's hard. It's hard to implement those future partnerships that both monetize well and provide efficiencies to the consumer, because it takes a lot of, you're disrupting people whose focus is just the wheel turning right in the pavement right in front of them than it is,
Well, and to be clear, let's talk a little bit about, like, I'll defend that mindset for just a second, which isn't necessarily my strong suit, but one of the things I took from Bob Walters at Rocket was, like, you have to say things 7 times to get them to start to land with your audience often. And, like, one of the things I'm trying to say 7 times or 700 times in this process for me is, like, the consumer only understands buying a home, owning a home as one thing. We are the ones that see it as different things under the hood, under the surface, or behind the scenes. We see it as real estate, mortgage, title, insurance, warranty, appliances, right? They do not. And so I think there is a benefit, Rick, to doing it the way you're talking about. However, I think also there is nothing happening to change the consumer's mind about our role as a financing industry in their life as this, like, one transaction, or as this one thing, home ownership, this one, obtaining the home, staying in the home. We got to do something pretty dramatic internally and externally if we want consumers to start thinking about the financing of the home, their monetary partner, their money partner in the home, as the one who also cares as deeply as they do about the home itself. That is not the case. It should be, in my opinion. It's just not.
Yeah, you guys are going to kick out of this. You guys know, with a newer startup, we're always refining our pitch and our data and everything that we use in our pitch. One of the things that Audi pitched at the Lending Tree Summit, and I think helped win us that contest, was that over 50%. This was in the Zillow home buyers report. Over 50% of first-time home buyers cry during the real estate transaction. And so that was one of our things, is like, we're going to integrate it all better. You're going to have a concierge from our team you can go to. We're going to do all these things to help solve that. But what a crazy place to start from. And it's getting worse every year. It was 40-something% last year. It's 51% this year, I think. Like, why is the real estate transaction getting harder and harder? It's insane.
It's not tears of joy at the closing, you're saying?
No.
Anguish, toil. Like, this is what we put here. Anguish and toil are the defining characteristics.
Yeah.
Half of you will be brought to tears.
Mortgage comes from the word mort, dead, right? That's the one always
says.
Oh,
yeah. Death chain.
If you guys, I got to drop, but I think I found a way where I can continue to have you guys continue the conversation while I pull out. So
we're going to find out, I guess.
Yeah. So good seeing you guys. Keep the conversation going, and hopefully this doesn't disconnect the LinkedIn Live to our thousands of viewers here. So
it does. Have a great weekend. So, Rob, I don't think we need to. I don't think we need to go a full 15 minutes more. If you're watching this, thank you. We can kind of wrap it up with some organized final thoughts here. But I get inspired by these conversations because it feels like there's huge opportunity out there, and I also get a little down in these conversations because it's hard to find an audience, find a partner to bring them all together with you. It is so fragmented, and it is so complex and heavy to the emotional component you just said for consumers, that when all of that is brought to bear, it's pretty intimidating to say, hey, let's all partner together to fix this, going back to the incentives we had. So what would you say is something that you're looking out for sort of in the next, call it 1 to 3 months, that would tell you where it's worth spending energy and time?
Yeah, man, that's a good question. I mean, I think it's that this time of year is always really strange, where it feels like not much is happening, but really kind of the gears are starting to turn ahead of the home buying season, which, tends to really ramp up as soon as really February and March, to some extent January, even. So, I'm what I've been preaching is if you want to get better at purchase in before the next purchase season, it's like, it's kind of time to act now, right? And we're kind of an integrated purchase mortgage solution. So I have that conversation, 7 times a day with lenders. So it's drinking my own Kool-Aid there of like December and January are kind of the right time to button up your plan for the next home buying season. And we have seen mortgage applications go up 6 weeks in a row. Well, I think they were basically flat last week, but basically applications have gone up close to 5 or 6 weeks in a row. So that's been fun to see. So I don't know. I mean, I think, you don't want to spend all the time talking about macro. You gotta figure out how to make your own house better. But it seems like the macro is getting sort of like better enough, like less bad.
That's a good way to describe it.
Yeah, kind of less bad is what I keep saying, right? And so I think it's a good time for people to kind of retool and make their plans. But yeah, I don't think anyone's making, or at least very few lenders are making really significant investments in things right now in general, right? It's like the margin's not there. Staffs have been cut and cut and cut. Some groups cut as recently as October, I think, right? Like it's still happening. So I do think it's kind of a painful spot right now, but things are getting a little better, and I think everyone's seeing some kind of light at the end of the tunnel. And the joke that everyone was making of leaving the industry for a year or two and coming back is like, I don't think, hopefully it doesn't come to that. But yeah, I don't know if that really answered your question, but it's really gearing up for March and April and May and next summer, right, is really what we got to do right now.
Well, I think you're making the key point. I actually said this to somebody yesterday, so it's actually really consistent. I think you and I are on the same page quite a bit, which is what you do now matters in April. And exactly. It's not always clear, I think, that there's a direct line there, but I think you're spot on in that advice. So I would say that to everybody, what you do right now does matter for April, May, and June. And I think the other thing that is a piece of that is, I was a little harsh earlier on what you do for your own team members relative to your ability to change the game or win market share. But the reality is, like, making your best teams better, finding the anguish or the toil within your own business and starting there, fixing that is very valuable. So if you can make your experts better, if you can make your best people better, if you can make your, operational teams better by, delegating to technology some of the work they do or all of the work they do and opening them up to do more, I think that's also achievable. I think it's a very realistic, achievable goal in the short term. And then it's just a matter of picking and choosing, where you keep that roadmap going, or do you stop and just get caught up in transactions.
And I do think that, it's like planting seeds, right? So another thing that we've been talking about a lot is, we're a B2B company. We basically see lenders as purchase business, right? And we have I don't know, a little over 20 different lenders right now. We signed up another one last night, so probably 21, 22 lenders. And so across all of them, they all have. We haven't worked with all of them that long, but I'll still use the term. But they all have record numbers of clients that are on hold right now, and in their own data, but now also in our data, which is much more specific to measuring the activity that they're taking. When's the last time they went to a showing? When's the last time they, maybe created a new search alert? Like whatever, with their agent. So. I do think there's sort of like this treasure trove of, and we talked about this on the MBA, the New England MBA summit that we went to a few months back, where you were moderating the panel I was on. But these clients are still going to do something, right? It's like people are still having life events. People still need house. People still want to transact. People still want to buy. People still want to sell. People still want to upsize, downsize, what have you, right? So I'm a firm believer that at some point, this pent up demand is going to come in. And hopefully it starts coming in soon, right? And maybe it's starting right now with rates coming down a little bit and applications going up a little bit. But I'm convinced that anyone that doesn't have a strategy, obviously reach out to me. That's what we're working on at NewsZip. But anyone that has a good strategy for nurturing all these kind of on hold clients, all these clients that got pre-approved or applied or even just entered the funnel somewhere of a mortgage or real estate company in the last, I want to say 18 months, but definitely 12 months. Most of them didn't buy yet. Most of them still want to, So I think there's like an interesting moment in the industry that I haven't seen before. I'm sure it happened in other, in the late 80s and 90s when rates were super high, but that was not in my purview at that time. I think it's going to be really interesting to see if we can do something interesting with effectively years of pent up demand of not enough real estate transactions happening. So I'm kind of excited.
Well, necessity is the mother of invention. Sorry, I knew I was going to get there eventually, but if that statement is true, something will give. The demographics are such, the market is such that there will be changes. There will have to be if the American homeowner is still going to buy a house at that life event moment between 22 and 45 or whatever. And so I think that gives us, for me at least, a good note to end on and say, like, let's hopefully hear from you. If you're still watching this, we would love to. And we'll be back next week. Thanks, Brock.
Sounds good.
Rick.
Thanks.
Talk soon, man. Bye, everybody.